cycle. Now that commodity prices are back and we're seeing stabilization in growth, the full emphasis is going to be which countries can arrest this trend. Most countries have been subject to credit rating downgrades. In South Africa, because of the build-up in debt, the corporate governance scandals, the political governance scandals, we have seen the country grapple with a growing debt to GDP ratio. And this was a country that was easily investment grade rating, rated by all the different ratings agencies as investment grade rating once upon a time. It's lost that. But for the rest of Africa, the question is going to be which economies can really put in place the reforms that are needed to make a difference to their overall credit worthiness. And with this in mind, let's look at Kenya's economic outlook. I've kept you here for a long time. I've made you sit through many charts. Hopefully you can all now wake up and we'll get to the more interesting part of the presentation. When we published our growth forecasts, we know that we were substantially below the consensus. The perception had been that the Kenyan economy had been growing strongly, 5 to 6% growth had been the norm. So why were we predicting at the time a much weaker growth number than a lot of the consensus? For us, it's something of a no-brainer. A lot of time last year was lost to the elections. There would have been uncertainty in terms of investment decisions, business activity that was waiting for the elections to be over before that activity resumed. And that means that in terms of economic potential, there's a lot of economic activity that just didn't take place in the last 6 months of 2017. We also know that 2017 was not a normal year, that the Kenyan economy was significantly impacted by a drought, that agriculture actually contracted. Now, the Kenyan government has published statistics looking at growth. If you assume that there wasn't this drag from agriculture, the growth numbers would have looked a lot better. But the fact is, there was a drag from agriculture, and this would have weakened growth in Kenya. Then there was the impact of the infrastructure cycle. There were a lot of big infrastructure projects timed to end around the eve of the election, which certainly helped to sustain growth in the first half of the year. A lot of that infrastructure spending would have gone very quiet in the second half of 2017. And the question we need to ask ourselves in forecasting Kenyan growth is, how quickly is that infrastructure spending going to come back? We know that fiscal consolidation, reducing the size of the government's budget deficit, needs to be a big focus in the second half of the current fiscal year and certainly in the next fiscal year. This seems to suggest that there isn't going to be the room necessarily for the quick resumption of these large infrastructure projects that had supported growth. So from the first half of 2017, you have a high base driven by infrastructure public investment, which isn't necessarily going to be replicated in continued growth momentum going forward. And then you also have the impact of the slowdown in credit growth. We think there's probably an underappreciation of the lags involved with that slowdown in credit growth and its impact on the real economy. Economic theory tells us that when a central bank provides a stimulus, cuts interest rates, or raises interest rates, tighten policy, it can take a long time before the full impact of that feeds into the actual economy. Not enough work has been done in the transmission mechanism of policy in Kenya. But certainly if you look at the tightening, the degree of tightening of credit availability in this economy, we can't assume that a quick fix addressing this legislation tomorrow is going to bring about an instant change in actual economic activity. There are always lags involved in terms of a policy decision, something that helps to boost credit growth or dampens credit growth and its impact on the real economy. For many frontier economies like Kenya, that time period, we may see the majority of the impact over at least a 12-month period. And this is why we have the Kenyan growth forecasts that we do. What do we expect in 2018? Well, the good news first. Elections are over, some level of activity resumes. The not so good news, it takes time to put government together. There isn't necessarily going to be the fiscal space for an immediate resumption of super turbocharged big infrastructure projects. So big support to growth that you had seen in the past just isn't there in the very near term.